Okay, everybody. Hello. Welcome to this live webinar. As usual, my pleasure to be here with you today. Welcome all. And well, the idea today is discuss a bit about how we use this Andrews Pitchfork trading tool to set levels among which we could trade in daily basis, right? I to find out that the tool, is accurate both for trading mid to long term and also intraday charts, right? We are going to see a bit of it in upcoming minutes. But what I want to share first of all is that I do hardly believe that market is all about determining the right supports and resistance areas, right? A support and resistance area is where we have a confluence of offer and demand. This world we live in is all about offer and demand, right? So setting those supports and resistance levels in the most accurate way is the first step to success in this forex life, right? Anyway, there are several tools which offer us the opportunity to establish accurate supports and resistance levels. And I was playing around a bit with new tools that this new for me because I don't know anyone who knows how to use every single tool around, right? So I'm always trying to look for new tools, at least for me, try to understand, try to test them, see how they work, and if they work, and then share them with you. I'm going to share this one with you today. Anyway, the idea of this Andrews Pitchfork, right, comes from Alan Andrews, who developed this tool that is the trend channel, right? That consists mostly on tree lines. Overall, it works like a channel, but it offers different or certain particular information beyond the extremes of the channel, the classical channel we always use. The fact is that this particular tool includes a median trend line in the center, right, with two parallel equidistant trend lines on either side. These lines are drawn by selecting three basic points. I have the chart in here because I'm going to show you how and why we choose those points, right? And those 3 points are usually based on reaction highs or lows, right? Moving from the left to the right side of your chart. As with normal trend lines or normal channels, the outside lines mark potential supports and resistance areas, right? And trends should remain in place as long as the Pitchfork channel holds. Reversals, of course, take place when price breaks out of the Pitchfork channel in the contrary direction of the dominant trend. So, the first step to use this tool is selecting those 3 points, right? And I found out this to be a bit tricky when you don't know how to use the tool, at least for the first time. But the fact is that you don't need just one relevant low, but 2 relevant lows, in fact, and a relevant high. Let me take the tool. Okay, I will insert it. Okay, so far, if we take a look at this euro-dollar descendant trend line, right, you need 2 relevant lows, and I consider this one around here and this one around here to be those lows with the high needed to confirm the figure as the third in here. Okay, so my first relevant low will be my 0.1, right? My first relevant high after that first one will be my 0.2, and the last low will be my 0.3. Having set those 3 points, I will enlarge it a bit now. I have it small so you can see it. I will change to the forward chart just to adjust the lines, okay? I tend to do this because sometimes when we set our lines in smaller charts, in bigger time frames, we need to readjust them a bit in smaller time frames. Anyway, here are my 3 points. The first one being the first relevant low, right? And that is where is the trick of this particular tool. Despite it's telling you about the relevant high or the relevant low, the fact is that you need 2 of one of them to set the tool. Anyway, the median line, right, is based on 2 points. In fact, if you click on it, you will see it one here and one here, those 2 points that set the median line, right? And of course, the first one, right, is the one you choose, and the second one is the midpoint in between 2 and 3, the extremes, the higher high, lower low. We have chosen to draw this particular channel. Okay, this median line, right, controls the slope of the channel, right? The outside line, the one in here, I will move that away. Okay, the outside line, okay, this particular one, usually it stands as a strong resistance level, while the base of the channel will stand as a strong support area. Okay, we said that price will tend to go towards its median line. So most of the concepts we use in forex trading, most of the tools we use tend to look for that median price, that pivot point, right, where market tends to go, right? So that's what we are setting there. And of course, we know that if that midpoint is overpassed or broken, we may either see an acceleration of the dominant trend, right, or a break or a change in contrary. Anyway, that midpoint is what we consider key to determine a trend. Okay. Anyway, usually, right, when price moves away or above the upper line in a bullish trend or below the lower in a bearish one, we say that price is overbought or oversold, right? And it will tend to come back inside the the figure to try to meet again the median line. But as you can see in this particular case here, it's not making case of that, and in fact it's struggling around the upper trend and the upper trend line, okay, aiming to continue higher or maybe not. We don't know at this point, right? Anyway, in this particular case, right, we tend to consider this zone as an overbought condition in the particular pair. If we are going to see a break higher or not will depend or will need some additional features. There are two ways to do that, okay, to consider if this channel is no longer valid as we are getting ready to break higher, or if the price may not do so and finally return to the median line. One way is setting a technical indicator. I prefer using trend one. Okay, a trend one you can use MACD, momentum, ADX is one among my favorites. So you can use the technical indicator to measure the strength of the movement and the strength of the momentum. As you can see, after the spike higher, technical indicator starts to losing momentum, right? Telling me that there is not yet enough strength to the upside. Of course, some rational thinking also wakes in the technical analysis, right? We are seeing that price is unable to break, and there are more chances of a move higher than a move lower. So what I tend to do in this particular circumstances, I'm sorry, I mix some things, is set a smaller pitchfork in the middle, right? I have a new relevant high in here, right? Let me insert the two. I have a new relevant high in here, sorry, with a second one and a low in this particular spot. Let me adjust it a bit, right? So this one, okay, this one set in a smaller time frame that the first one is on a 1 hour chart, is the one that will usually tell me if the correction is ready to extend and we will reach, or if we're going to break higher. I do believe that the best thing to use this second corrective smaller pitchfork, right, depends on the use of trigger lines, right? If that is just essentially trend lines that start at point 1 and showing the point 3, okay? A break above that upper trigger trend line, I will draw it right now in this particular case here, right? Okay, there I have again putting together points 1 and 3, right? A break above that level, right? Usually stands as buying signal, okay? If we break above this trend line, the pair price action will probably extend higher, okay? In the contrarian case, if we have an inverse channel, the trend line should be placed from point 2 or to point 4 and a 2, and a break below should signal a bearish continuation or probable reversal, right? Anyway, the idea, I'm going to the general idea. We are going a bit more on a trading. In fact, take a look at what's going right now. The roof of the primary channel is acting as support along with the trend line. So as long as above the 25-50 area holds, right, we are understanding that the euro would probably run higher, regardless what's going on with fundamentals. So let's let fundamentals out of the technical analysis, right? At this point, I have two technical readings in the particular chart. In this particular chart, they are telling me that we are struggling with a huge support level, right? And the chances, therefore, are of an upside movement. Again, the idea of support and resistance for me are key in order to understand the forex market and understand where are the forces that offer and demand and how we are going to move right around them. Sorry. Anyway, we are not going to expect much more price action at the time being of the day. Okay, maybe, and with USDT ahead. But anyway, that's the idea of how to set the trend line, right? We are going to discuss how to trade it in a few minutes. That's the idea of how to set the trend line in this particular case for this 4 hours euro-dollar chart. Anyway, I was studying this technical tool and find out that there's a lot of comments about the flexibility of the point line, right? What means the flexibility of a point line? But sometimes when you choose those two lows, or the two lows or the 3 points, basically, where to start your figure, right? Some traders, some internet pages talking about under Pitchfork tend to comment that the need of adjusting this trend line, right? Adjusting to maybe another low or another point, right? To give a more accurate slope, okay, to the channel, right? But that should be a bit tricky because if I use the concept I told you at the beginning of choosing two relative lows, one after the other with a relative high nearby, right? I have a more accurate reading, okay, of a break higher of an probable continuation in the trend. If I start to move this right to adjust it to my needs, I believe that we may become cheating ourselves, right? If I want to see this bullish, I would try to move that slope in order to confirm the bullish bias of the euro dollar. If I'm bearish, I will do my best to adjust this to a point where it starts to tell me that there's a chance to fall. So I believe that technical analysis should be objective, right? Should be objective in all kind of ways. So I find out that setting, as I told you already 3 times, setting those lows as the points for starting are the best idea. Anyway, keep in mind that of course this is not a tool that always works. We work mostly with a trend market, of course, not working in a in a sideways market. In that particular case, if we have a sideways market, and I will do it just to show you an example. Now that is a good draw under Pitchfork. The fact is that if I have a flat market and price moving sideways, right? The fact is that with no slope, with no 45-degree angle in the tool, there's no way to determine a consistent trend, right? I'm just guessing, I believe, at this point. Anyway, and back to the chart, okay, and the example I will share with you. Another example, I like it better because I believe that New Zealand dollar is in a more clear bearish trend. I believe that it was still bullish, but still rangy, right? But in this particular case, when we move to New Zealand or Australian dollar, we will see more clear the bearish trend or the dominant trend moving inside of the pair, right? It just take me a relevant high and a second relevant high and the relevant low in the middle of the trend. Maybe it's not always in the middle. Sometimes it's after the second relevant high. But anyway, I believe that this is a well-drawn under Pitchfork, right? So I have my relevant high and first one and second one and my low to draw the line. Sorry, I usually adjust them in the 4-hour chart. Anyway, The idea when we have a strong bearish trend is that we will try to look for trades, right? When price approaches to top of the base of the channel, right? Usually what I tend to do is wait for a second candle. The first candle that halts inside the channel, the first candle that halts inside the channel, maybe it's not the more accurate one. I need the second one, okay, a second candle to halt inside the channel and post a lower low compared to previous candle, right, to trigger a trade towards the medium trend line, okay, towards the medium trend line. Stop usually should be placed a few pips above the upper line, okay? A few pips, of course, will depend on the time frame you're trading. If you're trading, let's say a 1 hour chart, I would say that accurate stop will be in between 20 and 40 pips. For a 4 hour chart, not less than 50, but if you're trading with a daily chart, then the lowest stop should be between 80 and 100 pips above the higher chart. But anyway, in this particular case, we have seen that the price, right, stands in the middle line, right, without defining too much trend. However, technical readings are also telling us that lower lows are in place and the trend is healthy. So as long as the price action remains cut below the trend line, right, I could try to go for a bearish run, okay? As I told you, the second candle opening below the median or the upper trend line, in the case I'm going short, right? And breaking below previous low is the one that usually gives the selling signal much more accurate, right, than if we don't have that movement, okay? And again, so will be placed below the median. In this particular case, we have price unable to break higher, and with this candle, price finally broke below previous candle, though that's a place to take a selling trade, okay? Mostly when using this particular tool, and usually I tend to place my stop above the previous candle high. Seems a bit more let's say conservative, but anyway useful. Anyway, I want to do a small interruption to my speech and see if you have questions, comments, or ideas. Thank you, Boyke. Alex say, why do you draw the fork in opposite direction? Should it be the low high low or high low high? The current score is low low high. I guess you're talking about the euro, that right? Why do I draw a second one in the opposite direction? Because I understand that there's a possibility that the market would start a corrective movement against dominant trend. There is no trend without corrections in the middle. I guess you said this particular one I draw in here, right? Why do I draw the second one? I draw the second one for two reasons. First, because the price is struggling to break above the upper band of the channel and it's telling me there's a good chance the price will probably resume the upside term and extend its rise. But this tool, particularly this first big channel, is not confirming that. The corrective movement, in contrary, is starting to take place, right? It's a correction or it's a trend change. How do I determine that? Well, at this point, it's nothing, not a corrective movement, not a break. But what I do in those particular cases is draw a smaller one, right, and draw a trend line in between points 1 and 3. If price finally breaks higher and breaks above this trend line, it's telling me that price action is probably continue higher. That's why I choose the second one. I draw a second one, right? Is that clear? Do you understand why I do it in the contrarian way? It's just to confirm if the movements we are seeing that aims higher and probably force me to draw a new channel is a trend extent, right? It's going to extend, or if it's a correction, a deeper correction is starting and may reach the median line again, right? So I draw a contrarian one and a trend line in the upper, right? That's the idea of what do I do. That second one is smaller time frame. I was even following today in smaller time frames. And before starting this webinar, right? You 1 hour chart, but let me see where I draw it in here. Okay, we have this high. Okay, this first high, this second high, and this low in the middle. All this action, all this price action did not take place, right? After I draw these first 3 points early morning today, right? And I found out that price wasn't able to. It's the 1 hour chart, right? I know the bigger time frames are showing me that the pair is bullish, right? But the correction lower, it's happening. Okay, I can't deny it. I'm seeing it. So I moved to smaller time frames, maybe intraday, and I'm seeing that the price is unable to break higher and in fact reach its midline, right? In fact, it gave some pips. Regardless, I did not trade with them and I did not take them. Okay, but anyway, failures attempt, the new candle breaking and breaking below previous candle's low, that was the trigger to get into the market looking for the median line, at least using this tool, right? But anyway, as I told you, I did not take the trade. I was just following and seeing. I was doing something else. So anyway, my days are lately pretty busy. Anyway, if price, if price now, right, bounces from this midline, breaks above this level, I'm not convinced that the pair will probably continue higher, but if it breaks above this descendant trend line that shows 0.1 and 3 over this small correction lower, that it will be a more interesting signal of bullish continuation in the pair, right? Okay, and honestly, I draw this one when we have this high, right, and the pair start moving with this two first red candles. Okay, so another proof that the pitchfork works as important resistance level. Okay, it's okay. Do you understand the answer, Alex? Anyway, as you can see, I've been playing around with the tool a lot today. Not today, not just today. Anyway, again, with the pound dollar, another example, the dominant trend is bullish. I can't discuss that, but I found out that in certain cases, right, if I take a relevant low, relevant high, and the second relevant low, right, okay, the slope, okay, of the channel is way exaggerated, right? And we are trading in a bullish trend, but still the price is not being contained. That's one example I told you about adjusting that mid trend line. However, if I have to adjust mid trend line, then I'd rather not trade this particular pair, at least using this line. I found out that I can be foolish in myself if I do that. But this is what I think or what I believe. Because I would try to adjust the indicator to what I think and not what I actually see. In this particular case, it's not offering me an accurate point of view. But if I move to smaller time frames and do the same exercise and try to find relevant highs or relevant lows, I may find a different channel that will provide me with a more accurate market view. I'm not sure. Let me see if we can, if that is the same I did before. Sorry. See what I mean? If I start the channel maybe from this point, right? But when I start with maybe, I start not liking it, right? Because this is not actually a relevant low. Okay, this is a relevant low for me. So the chart is not offering me a clear outlook or a clear usage of the tool. I rather use another tool. I have too many. Okay. At least it's my point of view. You don't have to agree with it. Anyway, back to the euro-dollar chart. As I told you, the latest, right? Pitchfork. I could draw in here, right? As correction again. Okay, could stand now at this level. Okay, I may draw this particular one. Okay. Sorry. Okay, and find out that the pair is finding a strong support at this particular moment, and most likely to occur with the pair now is that it will probably bounce higher towards the 25.80 price zone, okay, and try to accomplish to reach the median line. Okay, it has found supporting very strong level, 25.50. We have the daily, we have a 4-hour Pitchfork there, so I do say that we may have chances to reach this level. If we break above, the bullish trend will probably continue. But anyway, it's a way of seeing. Okay. Anyway, I believe that to place a short or selling trade in this particular area, right now, not that I'm going to discuss it, but the idea is that price action needs to at least try to reach the upper line, right? I'm not sure if the median line will be enough when the dominant trend is so strongly bullish, right? If we are bearish, well, if the dominant trend was bearish, well, approaches to the midline should be understood as selling opportunities. But in this particular case, when the trend is so strong, right, I will wait for a test of the upper line. Okay, in here, okay, I would try to go for the upper line to be tested to try to attempt the settings towards the midline, right? With price action showing me that the sellers have no power in here, I would try to filter what I'm seeing in this daily chart and try to see where to go from here, okay? And so it's a bit of a logical sometimes it's required to understand to use the tool and understand the market. Anyway, for the short term, and if we move back to the 1-hour chart, right? If we are in the middle of the bearish trend, what I have to consider before taking the trade, the price needs to test the upper line, okay? If the resistance is not tested, it may mean that the upward, that the sellers are getting control over the pair that I'm seeing bullish. So mostly this second channel is understood as a filter of the dominant trend, okay? So I don't believe there's much more to add to that question. Sorry if I overextended. Do you understand what I mean? It's okay? Or do you leave us, Alex? Alex left us. Okay. Anyway, anyone have a question, a comment, an idea, something to share with us? Okay, no? Okay. Anyway, as I was saying about this particular New Zealand American dollar for our chart story is that the idea is to wait for candle to open below the midline, right? To failure around the midline, and the entry should be placed below previous low. That's pretty conservative, and we are riding dominant trend, so usually that should be enough with a stop right above recent highs, Anyway, if this particular pair by any reason starts to pulling back higher, right, approaches to what, 80-40, 80-20 area right now, right, would be understood as selling opportunities, right? The dominant trend remains in place as long as the channel stands, and it will prove me wrong only if it breaks higher, okay? And even then, a trend reversal should only be considered, right, not with the break above the upper line of the channel, but on the break of the trend line that I draw between points 1 and 3. That will be, okay, if a pair breaks above this trend, right, then is when I will consider the fact of a reversal in this dominant bearish trend, not before, okay? Okay. Can you show how to draw again? Yes, Boyki. I will move back. Sorry, I turned the camera off. Sorry. I will turn it back on in a second. Okay. As I told you, there are different ways to draw it, and there's the possibility of adjusting the line. But I try not to adjust anything. Okay. I go for what I see. So I try to watch for my first relevant low, and the one that stands out in the trend, and then I look back to what the previous relevant low. That previous relevant low, that will be my point 1. Okay. That there. Okay, I will look for the first relevant high. This is it. And then the relevant low that in fact determines the probable base of the trend. Okay, that is how I draw it. Okay, that is my way to draw it, and I found it to be more beautiful. Okay, it's given me more clear readings. If I change to the pound chart and I do the same, right? The fact is that I have this low, right, and I have no previous beautiful one, and the next one is a bit higher. So what I need is, in fact, is two lows. The second one lower than the first one. I do believe that that's the best picture to draw this Andrew Pitchfork channel. It's more accurate, the reading. Because if you have a second relevant low higher than the first one, then you will see this, right? That you need to start playing around with the midline to set a probable angle that fits the chart. And if you start doing that, you can love the objectivity, okay? And you will turn more subjective. I'm seeing it bold, so I will draw it to fit my outlook of the trend, okay? And I don't want to do that. I want the tool to work for itself, not because I have to adjust it. Anyway, back to the euro dollar, and I will turn back to the forward charts because it's easier to read. Sorry, I'm moving too much, right? Sorry, as I said, filtering with MACD and momentum or even ADX seems a pretty accurate way to determine the strength of the trend, and therefore be sure if we are going in the right way of the market. If the price, if I set this first high and this first low, and price reaches the upper trend line, right, fails to break above, it's telling me that it's time to sell, and the price may probably approach to the midline. Okay, with the dominant trend being bullish, breaks below the midline should be understood more as possibility of bounce higher and a retest of the midline than a standing chunk. I won't trade to downside below the midline, when the channel is to the upside, right? On the contrary, I would try to buy around this level, okay? Getting a clear sign of confirmation that the dominant trend remains bullish. Anyway, as I told you, a break below previous low, right? Confirmation of previous low is what takes to confirm the movement, and the sub above the level or previous high, right? In this particular case, the entry would have been around 23.80, the sub around 24.40, and the price took a couple of days, but finally accomplished the 100 pips to its midline, okay? And when I get this situation, the situation is telling me that there's a chance to break higher, okay? At this point, I'm not confirming any movement with this particular trend. Therefore, I have to depend on something else. I believe that either trading outside the channel or inside the channel, right? The fact is that we need to follow dominant trend until market proves we are wrong, okay? So it tends to offer better results, particularly when the method or this particular trading tool is applied to major currency pairs. You know, I have tested mostly with euro, pound, or New Zealand dollar. I'm not looking much at Japanese yen these days because we are seeing the readings mostly flat, right? We have more range in there, and we need a trend. And at this point, I believe the strongest trend are the Aussie and the New Zealand falling and the pound rising. So I have been applying to that, okay? And usually the cross currency pairs, right? I don't know, pound yen or GBP or Aussie or so on. They do exhibit trend patterns. I'm not against that, but usually they tend to be choppier, right? So they give me less satisfaction. So I go with majors, at least in my test over the past couple of months with this tool, okay? And I also find out that this tool tends to work better in the longer term or intermediate term than in the short term, okay? In the short term, as I show you, it can be analyzed to gather the magnitude of a corrective movement, if it's taking place or not, if it's going to continue or not. Okay, but honestly, mid-term to longer term seems much better than in the short term. Okay, and as any other technical indicator, it's not a standalone indicator. Another trend tool, whatever you like, will help us filter entries and get more accurate. The idea is that those support and resistance levels are telling us our target areas, our stop areas, and our entry area, right? And following the dominant trend. Anyway, do you have any other questions, comments, questions? Can you show how? Okay, so I already did that. Anyway, there's the final word I have about this tool is I would like to say that with no doubt the steepness or the slope of the pitchfork chart depends on the placement of those three first points, right? In particular, I believe that's the point 1, which is the start of the median. Even though point 1 usually starts with a relevant low or relevant high, sometimes, right? Sometimes I found out that traders had the necessity to adjust it, right? And I will highly recommend you try to not to use it if you have to adjust it, okay? I believe that we as chartists need to use judgment and experience, of course, when drawing channels or trend lines or whatever technical tool we decide to use. However, it turns to become too subjective for my taste. Okay, although technical analysis may have some subjective, I rather wait and I rather go for the objective side of technical analysis. Okay, a more cold outlook of what's going on in the charts to be sure that you are trading what you see and not your emotions or what you believe. Okay, that's sort of a final word for me. If there's out there a perfect objective system to get into the market, that will be me looking to trade it. Okay, as with most aspects of technical analysis, of course, it's important to build our self-experience by experimenting with the tool. Right? We want to learn and apply, seeing how it works, and doing the work ourselves. Drawing the trend lines, drawing the channel is the first step, okay? But it's not just this one, but any other trading tool. The only way to master an indicator is to use it and to understand how it moves and how price reacts, okay, in relation to it. So I feel that that's it, okay? That's the basic idea of trading, no matter what tool you use, okay? You're welcome. Anyway, do you have any other questions, comments, something to say about the webinar? You like it? You hate it? Nothing? Okay, no comments, no questions? In that case, I will be leaving you guys, okay? And I believe that we have another webinar in a few days, mostly by the end of September. I'm not pretty sure, but we will talk about it. Anyway, thanks all for being here and see you back soon, okay? Thank you. Bye-bye.